Okay, well, thanks everybody for taking some time out of your Wednesday and joining us. I really miss our old meetups when I got to see people face to face. It's really strange. I still can't get used to it, even though it's been months now of me talking into a laptop, little hole in my laptop. It's not the same. Anyway, so tonight's hosted by Volition. Um, we still like to thank Creeds, and hopefully in a couple of months, when this is all distant memory, we'll be back there and being able to meet in person. But they are still open. I just want to remind everybody, if you do live in the neighborhood or are passing by, to go check them out, support a local business. Who are we exactly? Well, we are real estate investors ourselves, first and foremost. We started this company several years ago, but long before that, we were investing in real estate. I did start off in student rentals. Matt did a bunch of stuff in the West Coast and in Hamilton, and then we all came to Toronto. And if you ever want to listen to the long version of that story, feel free to hit me up. I'm happy to share that experience with you guys.
These numbers go back. These numbers are completely out of date.
Yeah, they're much higher now, but this is probably about a year and a half ago now.
Yeah, we're at about 225 million. I don't even know what the number is for wealth generated and cash flow generated. Investors educated, our meetup is well over 2,000 now.
Yeah, it's 2,000 something now. So.
Yep.
Yeah.
Cool.
So what do we do? We get asked this all the time, and people also ask, how do we work with Volition? So the first thing is advisory. That's exactly what's happening tonight. This is the sessions, this is the education. The next thing is the realty services. This is actually finding an investment property. So let's say, hey, you go, hey, Ming, you talked a lot of interesting stuff. I want to actually buy a property now. How do I do it? That's what we specialize in. We'll help you find a property, and you actually buy that property. They're quite difficult to do if you've gone through this process before in Toronto. If that property needs construction and renovations, we can do that for you as well. And lastly, we can lease up and do the property management for that property if you need so.
Oh, maybe this is a good time. Go back. So sure. We haven't updated these slides. We have a new team member.
Yes, we do.
Look at that smiling face. Her name is Shelby, and she's waving at everyone.
Aiden.
Thank you for the intro.
Yeah, so you can say hi to Shelby. You'll be interfacing with her if you ever work with the Volition team. Okay, I need to put someone on mute. Who is it?
You can mute the whole bridge and then just unmute me.
Nawid. Yeah. Okay. Thanks. Okay.
Cool. I want to talk a little bit more about the slide this time, because actually this year, a much larger percentage of the work that we've been doing has been as, quote unquote, normal agents. And it's because the buying process for a personal residence has gotten a lot more complex these days. If you're buying a house to live in, it's, you are actually best serviced by somebody who is an investor-focused agent. And there's a bunch of reasons for that now. It's not, you don't need somebody to tell you if you like this paint color, right? You don't need somebody to tell you that, how you feel about the floor plans or the finish on the floors. That's not what is important when you can form those opinions yourself. You don't need somebody else to tell you that stuff. But where you do need some, I think, additional data points is around, things like appreciation fundamentals. Like when we're investing, we care a lot about that stuff. When you're buying a principal residence, it may not be as important, but it's good to know if you're buying in an area that is appreciating over the long term versus maybe you're buying in an area that is going through, a decline right now. If you need to do renovations on it, do you know how much it's going to cost? Most agents can't accurately, estimate construction costs, but we run construction companies, so we know that this, what you're talking about here is going to be 50K, 100K, 150K, and we can give you the ballpark figures, so that way you're able to budget properly and see if this home makes sense for a place for you to live. If you're looking at secondary suites, any way to improve your cash flow on a property that you're living in, does this property support a secondary suite? Can you do a legal secondary suite here? Or does this, will you have to go the illegal route? Does it have the right setbacks, the right ceiling heights, things like that? What kind of tenant profiles here? What kind of rents? So these kind of questions are more and more important for primary residence these days because, houses are really expensive. And a lot of people need to do more creative things in order to make, their own personal residence a reality. Add on to that, financing has become a lot more complicated. This past week, we've dealt with, in just 1 week, we have 2 clients who had their financing pulled out from under them just as they were about to close. Luckily, we're investor agents, so we've got private lenders lined up. We know how to ask the brokers the right questions so they can ask the lenders the right questions to figure out why financing is disappearing. One of our clients had a mix of, small business and personal finances. And because they had mixed up those two, the bank was denying them their loan. There's not many people who understand how to navigate, the complications of having small business as well. So anyway, I wanted to spend a little more time on this because I think it's a lot more relevant these days than it's ever been to make sure that whoever you're choosing as an agent understands this kind of stuff. If you like the lighting fixtures, you don't need somebody to tell you that kind of stuff.
Yeah, that's good. Before you go to the next slide, so I mean, definitely, we've been helping a lot more people on the personal primary residence buying side. We've also been helping people on the listing side. Like it's advantageous to be working with us, quite frankly, and I don't take that responsibility lightly. It's because whether a single family home or investor properties, we know how to list them. We know how to get you top dollar. For investor properties, because we are expert investor realtors, we know what people are looking for. We know how to market them. We know how to position it. We know the right things to highlight. What we know, and we have a big long list of people in our network, on our mailing lists. It's 9 times out of 10, every time we list something, it'll go to someone on our client list. So there's a lot of reason that you might want to think about having a chat with us on the listing side as well.
Yeah, definitely. Those of you who are active clients with us, I know we've brought on a bunch more in the last little bit. If you are missing from our private Mastermind chat group, please reach out to me after this and I'll make sure that you're added. And lastly, sign up for advisory with us. What we'll talk about today in terms of your real estate investment journey, it's generalities. Everybody has an individual situation. Everybody has individual risk levels, and everybody has different goals. And it's really important to make sure that what you're choosing as a real estate investment actually meets those things. There's no such thing as a best investment. Those who have watched me on these meetups hear me say it all the time. There's no such thing as a best investment, because if anybody tells you that, they have no clue as to what your goals are, what your risk level is, and all these other things. So every investment should be personalized to that. And lastly, this is kind of the maze, right? This is the complexity of investing in real estate, and especially in real estate in Toronto. And, we try to be that eraser in your life to cut through the crap and help you invest. So my market update, let's go through kind of what's happened. As I was doing this, I looked back at some of the stuff we talked about through March and April. And I wanted to bring back some of those old slides to see what the world was thinking then and then what actually happened, right? So back in kind of March, April, we were getting all sorts of stuff. So this is some numbers that came out from DBRS Morningstar, which is a credit agency, saying that, Toronto is way overvaluated. We're going to see drops in prices happening, and COVID is going to be the precipice for this, and we're going to have 14 to 18% drops happening over the next 3 years in price. That same week, TD Economics came out and said, there's still high demand. We're going to see Toronto home prices increase, by the end of this year, by about 7.8%. So what actually happened? Well, if you've been paying any attention at all to what's been happening in the housing market, TD was correct and they were low. So what we've actually been seeing, this is from TREB's July housing report, but the home price index, which isn't just average price, right? I talk about this all the time, but it's like for like properties. So looking at, let's say, 2-bedroom condos or 4-bedroom homes, the entire composite benchmark has up by 10% year over year in July, right? So we're seeing a price increase happening, and have been seeing a price increase happening even through COVID. Overall selling price is up, almost 17% as well. So, the kind of the doomsday sayers that came out in the beginning of when COVID started to hit, they were pretty off the mark. And those who have had more detailed conversations with, the reason that COVID didn't impact the housing market like I think a lot of people thought it would is because it's not a localized phenomenon. It's very different from, let's say, when oil and gas isn't doing well. When oil and gas isn't doing well, people exit the local economies which are supported by oil and gas. Calgary, Edmonton, there's emigration happening from those areas. But with COVID, you're not running away from anything. If you're in Toronto, or you're in Hamilton, or you're in Calgary, or you're in the US, it's a global pandemic, and it's not causing net migration out of, these like countries or major urban areas, right? I'll talk a bit about kind of what's been happening with the flocking to the suburbs or whatever that are getting into the headlines these days. But in terms of actual numbers, people aren't moving from Toronto to Edmonton because of COVID. So the demand hasn't disappeared. While immigration is a bit on pause right now because we're limiting movement in and out of the country, the population hasn't changed. And the population is, the fundamental when it comes to the demand side of the supply and demand equation in real estate and real estate prices. So unless population is changing, then we're not seeing this decrease in demand. And that's supported very heavily by the numbers. So, I just touched on here that average home price is up. And if you draw a line there across the July 2020, it is pretty much the top, right? We haven't seen average resale home prices this high in the last 4 years now. And sales volume is up as well. So not only are transaction prices high, but there's lots of sales happening as well. It's not a small number of sales that's driving these high prices. Listings are also they're not miserable, they're not great, but they are probably, I would say, better than average in terms of what we have for supply within the city. And so when we look at our ratio of home sales to new listings, and this is our supply demand ratio, right? There's only 1, 2, 3, 4, 5, 6, 7, 8, 9 other periods that you had higher sales to listing ratios. So, basically a short way of saying is that the demand is still there. People haven't moved away from the city, and they're still looking to buy properties within the city. Even if we've got listings to support it, even though prices are expensive, demand still exists in the city. The other place that I've, kind of added on because we've got more questions around these days, is what's happening with rents. And it's something that we're really going to focus on later. And our guest speaker tonight, Jin, is going to dive a lot more into is, what are we seeing in terms of rents within the city? So rents are down, right? We see here, this is all the major urban areas, within Canada, and we see a decrease of rents year over year for July 2020, down 8%. Okay. Interesting data point, but if you're a sophisticated investor, if you follow what we do here at Volition, we know that interesting data point, I need more granularity to really understand what's happening, because Toronto and the Toronto real estate market is massively diverse, and it's over 6 million people, and it's over a huge area. So what's actually happening? So we dive further into it. Let's go, postal code by postal code is kind of the next thing. Let's get more granular there. And this is average price per square foot, and this is by postal code, and this is the year over year changes in pricing that we're seeing. So you'll see here, some pretty big drops in and around the financial district, and probably just south of there, kind of the M5E area, right? Those are like 22% drops in price per square foot. Okay, so it looks like the average is being driven quite heavily by, one or two of these, area codes. What's in those area codes, right? What kind of properties exist there? If you're familiar with Toronto, you know that here, this is like condo central, right? You're not getting lots of condos that are, being built out, in the further reaches of the city. They're mostly in the downtown core. And, what we've been kind of talking about over the last couple of months is that it's been this influx, and I have it highlighted here, this influx of units, which were originally short-term rentals. So people who are using Airbnb or VRBO or whatever it happens to be to do short-term rentals. When policy changed and the allowance of Airbnb was shut off, you had a flood, right? A flood of new rentals coming on the market, and in particular, condos were hit. And this is what we're seeing. So massive increase in supply almost overnight. There is to a lesser extent, there's new apartment completions, right, that are happening. So there are several dedicated rental properties, rental buildings, which have been slated to come on over the next, 5 to 10 years. We're seeing the first crop of these coming on the market. That is adding to supply. And then on the other side is cancellation of every downtown in-person campus class. So the demand for student housing at the lower end of kind of the rental units is disappearing as well. So that's really what's impacted quite heavily on the condo side. And Ed will get into I always like to say we take the big picture and then we kind of drill down. But all the data that I'm talking about is always at best 1 month lag, because our data is always going to be kind of 1 month delayed based on the availability of the information. But 1 month is actually a long time in this market. And what me and Ed and Sam see is what's happening right now, and we're starting to see a little bit of a shift. And I'll let Ed get into that a bit later.
If you don't mind me, I just want to say about the previous slide. If you notice, some of the areas, they get affected a little bit more than others. And there's some areas that are known to be Airbnb heavy condos, namely some of the ICE condos, some of the condos on Front Street. And when those basically shut down and their bylaws changed, basically disallowing any Airbnbs in the condos, like Ming said, a massive amounts of rental properties came on the market at once. You'll see hundreds of listings there.
Yeah, I think it was like ICE, correct me if I'm wrong, I think we saw 200 plus listings right? In a 48-hour period.
Yeah.
Come on.
And those condos are not great condos to begin with. So people are just, they have to adjust their price due to the massive increase in supply. I mean, will this last in the long term? Like my predictions are most likely not. But it's like a new condo. When a new condo comes up, everything gets rented out for a discount. This
Yeah.
is the case, except on a larger scale.
That kind of, it touches on, I'm going to talk very briefly about something you mentioned there. And it's the difference between an influencer and a fundamental, right? Policy change, like what we're seeing happening with short-term rentals, are influencers. And the reason is, if tomorrow, right, COVID's gone and travel happens again and they're allowed to open up Airbnb, you can, bet your every dollar you've got that people who are wanting to rent out on Airbnb will go back to renting out on Airbnb because their cash flow is better. So as soon as the policy changes back, or as soon as the short-term rental ban is lifted, state of emergency is gone, people are going to want to go back to that. That rental supply is going to disappear again, and it's going to disappear very, very quickly. It'll be an overnight because it's a policy change, and unless they do some sort of phased approach, right? But it's not a change in the fundamentals, which would be, let's say, population, right? Population isn't changing, but how population can use the rental supply can be very easily changed by this policy. So when policy changes, and you can bet they will allow short-term rentals back in some capacity, you'll see again a shift happening in rental prices.
So Ed, what were some of those condos that you, Ed's sort of our short-term rental expert, what were some of the condos that you were seeing impacted? You'd mentioned ICE. What were some of the others?
Maple Leaf Square,
yeah.
Right? You saw 300 fronts.
Yeah, for sure.
Yeah, it's like all these like condos in the core, they got affected by not only a lot of vacancies due to, I'll touch on that a little bit, maybe more in the next few slides.
Okay, cool.
Let me finish for a second. You guys.
Yeah, and the other thing for us to drill into, we're kind of picking on condos here, but let's actually look at the property types and see what's happening with those various property types that are in the rental pool. So this is kind of, the three that are easily tracked right now: townhouses, condo apartments, and rental apartments. And the difference between condo and rental is condo is like, the condo that you know and love. Rental is a dedicated rental building. You can see here that, the doomsday headline of 8 straight months of rental prices decreasing only actually applies to condos. They definitely have been affected, and they have been affected the worst. You're looking at an average rent there for a condo about $2,600 in January, dropping down to about $2,300, right? About $330-ish price difference over a 7-month period. Versus if you look at townhouses or even dedicated rental apartments, it hasn't been as clear of a story. There was actually a bump up in townhouse pricing April, May, June, and rental apartments have been starting to swing back up again as well. So it depends on the property type that you're invested in as well. I always tell everybody, don't just look at the headlines, dive into the data. And I think when you're trying to understand rental price impacts, it's not just, it really isn't about the headlines, because they're a great headline. People have been complaining about high rental prices forever in Toronto. So when they see the opposite, man, those are clickbaity headlines for sure. So it's a good headline, but it's not telling you the whole story. Definitely there has been impact, but it is very focused impact that we're seeing. Cool. Ed, did you want to talk through our Volition market data?
Yeah, sure. So every meetup, we like to talk about the GTA real estate market data. We like to analyze and compare the downtown core market with the rest of the GTA and other municipalities in Toronto. For the first time comers, the Toronto downtown core is basically from Hyde Park to East York, which is W01 to EO2, upwards to Eglinton, CO3, C10 area. If you don't mind going to the next slide. And why we focus on the core as our investments is, as you can see, we see a steady increase in property values year after year. Not only that, we have a great tenant profile here. And this chart right here basically shows what the average, sorry, not the price, but the housing index for detached homes in the downtown core area. I'm not sure if everyone remembers, but in 2017, there was a massive drop in house prices throughout the GTA. And this was due to regulatory changes and mortgage lending changes, kind of what Ming was touching upon before. But at the end of the day, land and location is everything, and you can't create more of that. So we kind of see a steady increase year after year due to the limitations of the land in the downtown area. But this was kind of, that increase was kind of stalled in mid 2020 or the beginning of 2020, and that was due to COVID. But that decrease in, I'm not sure if you guys see in the slide, but in March, April of 2020, we see a small dip in prices. That dip in price was more due to the lack of volume. People didn't want to list their homes, and people did not want to go see homes. So there were few properties being listed, few being snatched up a little bit below value, but overall the Toronto market was relatively stable throughout all of COVID. And then after COVID, if you see June, July, and August now, we see exponential increases in prices. And this is where you kind of see in the news articles, at least, 15% increase in value, 24% increase in value from the same month last year. So I think this is due to multiple reasons. This is due to cheap money. Lending rates has been not at an all-time low, but at a very, very low point in Toronto or Canadian history. But on top of that, people have a lot more time. People are not traveling. People are not traveling for work, and people are not on vacation. So we see a lot of people being stuck at home and having nothing better to do but look for a bigger place. And people want a bigger place because they're crammed in their homes and working from home, either just for now or even for the next little bit. So they do value space, and they value space a lot more than location. So I think this is the first time in Toronto history, I could be wrong here, but where people are valuing space more than location. And we'll touch upon that a little bit more in the next few slides, because people are willing to traverse from living in condos, where it's in the dead center of the city, to living in houses with just a lot more square footage. And we'll see this also in other markets in Toronto. So if you don't mind going to the next slide, Ming. So Toronto everywhere else. Toronto everywhere else is basically outside the core, including Scarborough, Mississauga, North York, and the York region. And we'll mainly focus on the uptown markets of Vaughan, Richmond Hill, and Markham. So even in the uptown single-family detached homes, we see a similar trend. We see a massive dip since 2017. However, the uptown market has been relatively plateau or decreasing year after year up until now. This goes back to my original point, where people are valuing land more than location. But I think the issue here is that the further you travel away from the core, land becomes cheaper and cheaper. And the value of land becomes cheaper and cheaper too, right? This pandemic is a short-term thing. It might last until mid next year, maybe end of next year. No one knows for sure. But when things do recover and goes back to normal, people are going to want that convenience again of living downtown. Offices will open again. and people are going to have to go back to work and not work from home. I know a lot of people are saying that that a lot of companies are transitioning from virtual offices, but I don't see that happening forever.
I think, to add on to that point, because I think it's a very valid point. Sam, me, Matt, Ed, Shelby, Jenny, we can completely work independently and through virtual means, and we've always been able to for the existence of this company of Volition. But we choose to get together. When COVID wasn't a thing, we would try to physically meet up on a regular basis to do work. Why? It's easier. Like, I don't know about you guys, but trying to do a whiteboarding session or brainstorm through Zoom sucks. Like, it is a crutch at best, but it is no replacement for, in-person meetings, developing that networking with your, your business colleagues, building relationships. Some of these things which are so key to business functioning, right? And just doing that in isolation only works to a certain degree. And definitely there will be businesses which can kind of adapt to this, but I just do not see it as a long-term fundamental change in human nature to be isolated from people and to not want to work, collaboratively to get stuff done.
Right.
But yeah, I'm willing to place my bets on that. But yes, go ahead.
I think to that point too, and that is why we see much more of a decrease in the Toronto rental market in the downtown core regions versus detached homes, townhomes, and whatnot. Because those detached homes, townhomes, semis, or other properties are usually located out of the GTA. And because people right now, they have no reason for living downtown. There's no offices. Bars are not open. Clubs are not open. Restaurants were not open, at least during phase 1 or phase 0 of COVID. People lacked incentive living downtown. On top of that, travel was gone. People were thinking that schools were not going to reopen too in September. But this has all kind of changed because I'm sure everyone's following the news. Most schools are opening. Some classes are going to still be online, but students are coming back. I know Ming said that we're going to talk a little bit more about what's going on the ground right now. And what we're seeing is that there is an uptick of rentals. The market is recovering, but a large part of Toronto is still, there's still a delay, right? Our market is driven heavily by international immigration and also foreign students. That is still not there. But once the market does recover and once the world does open up again, I can see the downtown market or staying relatively strong, while the uptown market might plateau again, or we might see the dips that we have seen year to year previously. So yeah, I know there's an uptick in June, July, but that's because people are really, really valuing space. Like I don't have a girlfriend myself, but I know a lot of my friends who do have girlfriends who live in condos, and I have many clients who are also in that case. They were just bugging me every day to look for a property or look for a home for them, and they couldn't. Some of them could not afford much. They were willing to travel to the west of Mississauga or even Milton to purchase a small home just because they valued space. Are they going to be okay with a 2-hour or 1-hour commute once COVID ends? Maybe. But I think majority of people are still going to value that convenience afterwards. Sorry, I know someone was trying to talk and ask a question, but
no, I think they're gone.
Okay. And lastly, I guess next slide, if you don't mind me.
Yeah.
We'll talk about condos. So the condos are showing a very similar trajectory to, or similar trend, sorry, to what we were discussing previously about single family detached homes in the core and in the uptown markets. The issue with condos in the past few years is that the delta between a detached home and a condo has been decreasing at a very, very fast rate. In 2017, during the peak, a detached home, the difference in the price of a detached home and a condo was around $700,000. As of mid 2019, that difference was around $450,000. So people are kind of wondering, why buy a condo now instead of buying a house? I mean, a lot of the reasons were given in the previous slides. Due to convenience, you can't buy a house of similar value or similar finishes in a good location. But that difference is slowly shrinking. And because, again, people are not valuing space more than convenience now, we see actually a slight drop in condo prices as of mid 2020. So this, I believe, is also short term. I think long-term condos will see a continuous rise in prices, especially since house prices are going up at such an outstanding rate. Once the rental market gets filled up, I think investors are going to feel more confident in buying more and more condos. I see that actually today. Resale values have been remaining relatively the same. Good properties that show well and have a little bit more space actually sell very quickly. That includes rentals too, for the downtown core condos. And I'm also seeing that pre-cons are selling like fire. Properties that are going to be done 4 or 5 years from now are getting bid up within 1 or 2 days, a good project at a reasonable price. A few of the projects that we promoted this year was the 88 Queen, which was around Jarvis and Queen, or Church and Queen, and 28 Eastern, both because of their great prices and or the deposit structure, and also the timeline for completion. We expect that the prices to not only rebound but also surpass what we see of this year for condos. But interimly, there is a dip, largely due to vacancies and, like I said, people valuing space more than location. Sorry, next slide, Ming. So I guess I kind of talked about this in the previous slides. What's actually happening is that good locations, good spaces, actually, not good locations, nicely renovated properties are still selling well and renting well. Spaces that are spacious and not crammed, like a 600 square foot 2-bedroom, get rented out instantly still. For one of our clients who's on the call here, he had a 3-bedroom within 1 week of listing, 1,200 square feet home for $3,600. We had 4 bids. We chose a tenant who had an 850 credit score. It's quite wild. So Toronto, even though the market and a lot of the news has a lot of, I guess, a lot of very, very negative headlines and very positive headlines, it's still a very, very strong market if listed right and done right, and you have the right property. And I guess lastly, the Toronto market from the rental point of view, and why I talk about renters is because they are our main bloodline, right? They are our main clients as investors. They haven't really been the ones who are not paying rent. Those headlines of people who are not being evicted and not paying rent are mainly outside the GTA from what we have seen. Within the GTA, none of our investors have had that much trouble, and even ourselves, for our own rental properties, we have had excellent tenants paying on time, and sometimes even paying when they're vacated out and they want to trade up, even though they're moving a month early, they're still paying the remainder of the months. So our tenant profile seems to be still very, very strong. That's it for now. I think Matt now wants to talk about our new venture.
Oh, really?
Yeah. Not your turn.
Yeah, so I'll just I'll kind of segue into it a bit. If you've been following us for a while, we talk about how do you make Toronto work, right? It's a very tough market to invest in. Properties are very difficult to come by. When they come by, they're very expensive. Not only are they expensive, but your mortgage qualification has to be, very high. You've got to have very high incomes. So basically, there's a lot of barriers into investing in Toronto. And as a company, we've been trying to figure out, like, how do we address it? Like, how can we make it more accessible to people who don't make $400,000 a year, right? Who maybe have money but don't have the millions of dollars you need to do these kind of renovations in the city. So I'll let Matt talk a little more detail about it, but this is that's kind of the problem that we've been trying to solve.
Yeah. Okay. Move on.
Yeah.
So this is our soft launch of Volition Ventures. So you're part of history. Congratulations. So basically, this is something that our clients and our investors have been asking for years. We've resisted, but sort of like that guy who just keeps on asking you out until you finally give in. We finally gave in.
Is that your dating technique?
That's how I won over Amy. Yeah. So we are launching a mini REIT. The Volition mini REITs are a mini Volition private equity fund. It's not going to be as large as a REIT or a private equity fund. We're launching this as a LP, limited partnership. So as Ming was saying, basically, yeah, we acknowledge, Ed just talked about it at length. Ming has just talked about it at length. We still believe in Toronto. We still think Toronto is where it's at and where the growth is. We see long-term potential still. And we're trying to solve a different problem now. So we believe we have a great business model. We believe we have the best business model. We've analyzed all the business models, so we know this one's the best. I like to think that we're smart about what we do. We have a big, long list of very satisfied and happy clients and investors. If you're so inclined, you want to chat further with them. A lot of them are on this call. But what the problem we're trying to solve now is accessibility. So, and I don't mean wheelchair accessibility. I'm talking about how do investors get in? How do you get a toehold? And I'm not saying this is going to be for everyone, but if you are someone who has some cash or a substantial amount of cash, maybe, and you don't have the time, you don't have the wherewithal, you don't have the knowledge, you don't have the energy, you have a business you're running, you have kids, you have family, you have other commitments, but you want to get a piece of this. This is where we're going to offer you that opportunity now. So we've been doing this for years. We're now I've talked about this for a long time. Buying dirt. You buy dirt by buying buying a freehold house, right? We've always touted that as the best investment in Toronto. It's just a matter of making it work. A long time ago, you could get a single family home and rent that out. Can't do that anymore. So we started densifying. We started putting 2 units under one roof, or a duplex. And when that didn't work anymore, we started putting 3 units under one roof. And now we are at the point now where we're starting to make that leap into 4 units under one roof. or maybe 4 units under 2 roofs. There's a new initiative that Toronto is finally on board with, laneway housing. And so this is what might create the opportunity for to create a very, very lucrative investment. So I'll get into this a tiny bit more. So I don't want to monopolize this meeting. This meeting is about something completely different, but I just want to touch base on something that Volition is doing, something that if you happen to have any interest in, drop us a line. You can email info@volitionprop.com. I'll put that in the message box for you guys to email us. Yeah.
Work.
Okay, I'm gonna put someone else on mute. Okay, but yeah, it's an exciting new venture that Volition's undertaking right now. It's going to be for people of a very specific profile. Who's this for? If you're the type of person, you're a go-getter and you want to do this yourself and you qualify for that mortgage and you want to learn, like we know how to do it, we can teach you. We're very happy to teach you. We're very happy to walk you through the process and hold your hand. But if you don't want to be that person, you don't want to be that asset manager, this is another way to now get in. So I think we're going to be launching this. This is just a soft launch right now. We're just sort of announcing it, letting people know about it. If you have any interest, let us know. We can have that chat further. So it is just a soft launch right now, but over the coming months, we'll have more information. And I think we're looking to get this off the ground in the kind of October, like November timeframe, if I recall correctly.
Whenever you're free, Matt.
Yeah, whenever I'm free. So this is something that I think we talked about at our last meetup, like April or May or something. And yeah, we had a flood of requests, and I was like, yeah, don't worry, we'll get back to you. I'll get back to you. So we'll actually get back to those people now. Okay, go.
Just to put a bit of context, it's a ton of work to try to actually set something like this up. I'm sure, for those who are savvier real estate investors, it's not just a matter of setting up a GPLP and we're good to go. We can go buy a place. We have to make sure that the properties are available, that we can the numbers work, that we've got the right corporate structures, that we're managing our financing, and we're taking our tried and true business model, but you just can't simply take it and apply it across multiple people, and we want to make sure everything's good, obviously, before we share it with the world. So
yeah.
So Matt's been doing a ton of work.
I'll give a quick overview. Just go to the next slide. I'm going to spend like literally 30 seconds on this. Yeah, so I mean, this is a very, very, very valuable asset class, but there's so few of them. You can't find one that makes sense because the prices are so high. So cash flow doesn't work. So our answer is to create one. Volition has the unique, we're uniquely situated to be able to do this. There's only a handful of people in Toronto who know how to do this. And that's one of the reasons that you see so few of them. It's because to navigate this process is incredibly difficult and very convoluted. But anyway, yeah, this is going to be like, if you're looking for a true investment, like if you want to be an investor in real estate, I've said this before, if you think you're investing in real estate by buying real estate and trying to be a landlord and all that other crap, you're sorely mistaken. You are a business owner. And there's a lot that comes along with being a business owner. But if you now want to be an investor, this is a way for you to be an investor now. We'll do everything for you. So change of use from single family home to a legal luxury fourplex is going to be kind of the crux of this business model. And then move on. So we're gonna buy a nice, a single family home in an awesome neighborhood. We're gonna dump a bunch of money into it, make the thing beautiful, attract top quality tenants. It's very similar to our current business model where, we've done this a ton of times for triplexes. We've done this for fourplexes, but now we're systemizing it and we're turning this into an accessible way for other people to actually do it as well. So the numbers are big, but the returns are even bigger, and the opportunity is massive. And because we know what we're doing, there's a point here I don't want to skip. 100. If you were to do this and you didn't know what you're doing, you could easily run into a $200,000 development charge if you didn't know if you didn't know what you were doing. The city will charge you for trying to go from a single family to a fourplex. We know what we're doing, so we know how to avoid this charge. So anyway, that's the type of expertise we bring to the table. Okay, keep on going. We have the entire team, as you can see. Okay, financing. You don't need to qualify for a mortgage. So, I mean, if you are fortunate enough to, the numbers we were talking about was, this is going to be a $3 million plus fourplex after we're done with it. And part of the business model is to refinance afterward. If you qualify for that mortgage, maybe you're the right person. Maybe you could do this on your own. If you have the wherewithal and everything else. That's just one part of the puzzle. We've solved the financing equation now to be able to do this on an ongoing basis in a very systemized way. We know how to mitigate the risk because we know how to operate through COA, which is our biggest risk. Right now, we're looking for investors. So again, flip us a note if you're interested. We're currently setting our minimum investment at $250,000. So again, it's a chunk of change. A lot of people are gonna go, oh, okay, for that much I can go buy my own investment property. Yeah, you're right, you can. That's no joke. But for someone who sees value in what we're doing and sees the potential upside, this might be interesting to them. The key component here is after 1 year, after we're done our renovation, we're actually going to we're targeting almost a 50% return of your capital after we refinance. So it would be a bunch of money up front, and then potentially maybe just half of it you hold, to hold for the next 4 years. It's not going to be RSP or TFSA eligible. Sorry, guys. It's an extremely complicated process to do that. And
we don't have that skill set yet, or pockets that deep to be able to create a RSP eligible.
Yeah. So anyway, yeah, that's it for now. We'll have more details forthcoming, but reach out to info@volitionprop.com if you're interested, or speak to who you already are working with on the Volition team, whether that be Sam, Ming, or Ed. But don't talk to me.
Cool. Thanks. Let's turn it over to our main event. So for those of you who know, I think many of you here know Jin already. He's spoken a couple of times at our meetup. He's a fascinating guy to be in touch with. The title of real estate entrepreneur probably is the best title because he's, I don't want to say he's developer because he's been there, done that, or construction, construction manager because he's kind of been there, done that as well. But if it's real estate and it's interesting, Jin's been involved. He has a very large portfolio of properties that he's done both in Toronto, and he also did some multifamily. I think it was in the Hamilton region. He's done a bunch of very large scale renovations. He's currently working on some pretty awesome projects in Toronto right now. And he's here to talk to us today kind of about a problem that we're all facing. So, the data that I was talking about at the beginning, all those news articles, encapsulates, an investor problem we're seeing right now. Prices are going up. They're going up and up and up and up. Demand in the city has not been wavered by COVID. Even with immigration pretty much stopped right now, the latent demand is still within the city and is driving prices further up. Asset prices up. At the same time, we're getting a decrease in rental prices, right? Now, that is starting to recover, but there has definitely been an impact into our rental prices. So how the hell does this work now, right? We've got decreased rental prices, increased asset prices in a market where cash flow was already pretty much non-existent. I don't want to take Jin's thunder away from his presentation, but it's really a phased approach where we're looking at using short, mid, and long-term rental, and how do we, use a strategy like that to get us through the hump to where, to ride the storm where rents will become normal again and then go back to our standard business model. So without further ado, I'm going to turn it over to Jin. Let's see about sharing your screen, sir.
How are you doing?
Good. How are you?
Very good. Thanks for having me.
Good. Are you able to share your screen?
Let me see. Let me see if I can figure out this. Share screen. I see it. Yep. Share.
Yep.
You see it?
Yep. There you go.
Awesome.
All right. Okay. Thank you for having me. To begin with, I feel really incredibly fortunate to hang with the Volition folks. I met them some years ago, and I've been saying it over the years to every single people I meet. I've been through a lot of seminars and workshops and real estate clubs, and when it comes to real estate investing, especially Toronto and especially fundamental based, nobody beats these guys. They know their stuff and they really care for their clients. And tonight's topic is very interesting. Not only that, so every single thing that both Matt and Ed and Ming mentioned tonight is I'm going to touch every single one of them. And in some ways, some people might think that I'm going to go in a little bit far deep end. It could be entertaining, maybe not. We'll see. I have a tendency to go a little far and little too far out sometimes, but I think this if that is necessary, now would be the time. And I will explain. And by the way, I'm really glad to see the Volition people are launching the Volition fund. I remember talking to Matt about it maybe 3-4 years ago. And dude, you got all these amazing people and you guys are investing in Toronto. You guys need money. You got to put these people together. And Matt's going, yeah. Now finally he's here. So glad to see.
Well, I'll be honest, joint ventures were a pain in the ass.
Oh, for sure.
Partners were a pain in the ass. So I tried to avoid it for as long as possible, but it sounds like the right time. So, Jin, did I hear you correctly? Did you say that you went off the deep end? Is that?
No, I'm going into the deep end.
Oh, you're going into
yes.
the deep end. Okay, I thought you went off the deep end.
Oh, I have many times. That's if there's something that I've done is going too far and deep end. So I like to share some of the stories and help other people avoid that mistake. So let's start my presentation. How do I start? Slideshow. Starting from start. Hey, do I have it right? Do you guys see it?
Yep.
All right, let's see it. Okay, climbing prices and record falling rents. Now what? Amazing topic that the Volition guys came up with and dropped on me. So I'm gonna try my best to kind of answer that question. So what are we gonna cover? I'm gonna start with the big picture, the big picture. Wealth preservation versus portfolio management. Why is it more relevant than ever to stick to the old rule? And the thesis is on why I do what I do and the reasons for real estate investing. And also a little bit about the background about myself and the people and the team that I work with. And why now is the right time for real estate investing and why now is the right time to invest in downtown Toronto. And why I am employing the very fundamental based long-term hold strategy, but with a bit of a twist on top. I am, people think what I'm doing is short-term rental, but I'm gonna say it's more of hoteling strategy than short-term rental. So just to quickly touch, technically speaking, short-term rental is anything less than 28 days. But I'm not just staying in that space. I am staying in the space people who comes into the properties that I offer with the mindset that they're going to be staying at the property on a temporary basis. They're not looking for forever home. And let's see what the next steps would be. So brief history. Who's Jin Kim? I'm a family man, father of 2 little girls, 5 and 8, and I'm a U of T, University of Waterloo engineering grad. And from there on, I thought that I was going to become an architect. So I went to OCAD for sculpture and installation. There I realized that I didn't actually want to become an architect. Being a firstborn son of Asian family, I felt that it was my duty to become some sort of a professional, and I could not be anything other than professional. So I thought that, for sculpture and installation, thinking that I was going to go into architecture program after Waterloo, then after the arts program. There I realized that I didn't actually want to become an architect. I was kind of trying to find ways to please my parents, yet not be an engineer. And but I came to a point where I had to pay the bills, so I got a job as an IT manager for an architectural company, and later I worked for construction management company, and I was doing IT management for 12 years. During that time, I wanted to get out of working, get out of the office. So I spent 7 years in seminars and workshops and things like that. I flew everywhere to, spend tons of money and did not really learn too much and didn't take much action until about 13 years ago. I started doing real estate investing. And as all the Volition guys mentioned, I am an absolute believer in downtown Toronto. I'm going to cover why, but I think we are at the just beginning of a big transformation. And people, 5 years from now, 10 years from now, they're going to say, hey, you guys were so lucky, you're at the forefront of transformation. But yet everyone's saying that, oh, Toronto's too expensive. I really feel people haven't seen what's to come yet. So the phase 1. So I wanted to get out of working. So I chased the cash flow so that I can get out of work. And I realized that there's no cash flow in Toronto. And everyone in all the workshops and books, and everyone told me that I got to go to 2nd tier city, 3rd tier city to get the cash flow. So I went to Southern Ontario, multifamily rentals. It was easy entry, cheap, and I was chasing that high cap. And then I realized that high cap means more work, more challenge. And I learned the valuable lesson of price versus value. I was chasing the price so that I can get the cap rate, but it just didn't work out. The quality of people didn't work out. Quality of the properties didn't work out. So I said, okay, that's it. I'm done with training. So I moved on to Toronto. I came back to Toronto about 5 years ago, started to kind of teach myself about how to create value in Toronto. So just quick note, it's like when you redevelop or create more value, it just means that I realized that real estate investing, it comes down to only 2 things. It's about, when we buy properties, it's not for our use. It's for somebody else's use. That means then we have to have a good client. So I wanted to get properties that can attract good quality clients. And the next thing is that it's all about the land. You build 2,000 square foot house in Toronto or Vancouver or Timbuktu, build cost is pretty much plus minus similar, but the end value is substantially different. What that means is that the real value is in the dirt. Just like what Matt said, is what we really need to buy is the dirt, not the actual building. The dirt has the real long-term value. So when we do developing, that means that the land value is higher than what's sitting on top. So we're simply matching the value of whatever's on top to the value underneath. That's what the redevelopment and value creation is all about. Before there was a junkyard or funeral home when the land was cheap, but now things have changed. There's higher demand. There's more people there. Now what's sitting on top does not justify the value of land. Therefore, it goes and something goes on top, right? So during that process, I did a whole bunch of we did renovations and we just renovated and sold it. Anything from interior rental to top up an extension underpinning some big luxury homes. And, we attempt going through some rezonings and was looking into getting into, mixed use commercial developments and whatnot. So during that whole process, I learned that the real money is in the land. So number one, I learned that I want to have good clients. Number two, then I learned that it's all about the land. So I came to the third phase and I started to combine these two. So the phase three, which is now, to me, it's all about value creation and cash flow. And to me, it's only downtown that gives me both, right? So I'm trying to combine the best of the both worlds, have the best of the land and best of the customers. If you build, they're one of the best hotels out of nowhere that nobody goes, you're not going to be able to attract client. So the location is important, like key location, land comes first. And when you buy the right land, there's an opportunity to massively increase the value by changing the use, or by the improving the number of units, or doing the top ups and whatnot. So we've been all working with what I call hardware, the actual physical assets. But interestingly, I know if you've been to any workshops and read any real estate investing books, then everyone will tell you that cash flow and the appreciation are at the opposite ends. They're like seesaws. If you have, appreciation, you don't have cash flow. If you have cash flow, you don't have appreciation. But I believe the Toronto is at a very unique point in time that there's a massive transformation is happening. Like, in my opinion, Toronto used to be like B- city. Now we've gone from B- to B, and going through B+, maybe heading towards A-, and one day even A. I don't think it's going to be A+. It's just not going to be, New York or Tokyo or Paris. But we're going to get to A- and A. That's still a long way to go. So because the whole market is going up, the whole seesaw is moving up with it. So we are at a strange and interesting point in time that we can gain the massive appreciation and massively force the appreciation as well, and have cash flow as well, right? So I do that by employing what I call software, AKA management. So before I go into the nitty-gritty details and technical things, I think right now is really relevant time to think about what really big picture is. I'm not talking about 5 years, 10 years. I'm not talking about portfolio management. I'm not talking about stock markets. I'm talking about really big picture, like the picture of hundreds of years. Like, this pandemic thing is substantial. No one in our lifetime has seen it, but we've gone through this before many times. And on top of it, we're coming to the end of long-term death cycle, which is about 80 to 100 years. And it's been coming. And because that cycle was coming to an end, and the COVID was dropped on top of it, now there's all kinds of chaotic things happening. And I think that's where the real opportunity lies. So let's see, why real estate? So in general, we talk about real estate investing. These are the advantages of real estate investing: cash flow, mortgage pay down, tax benefits, appreciation, leverage, and real estate is a slow moving vehicle, so you can correct it. And as long as you can hold on to it and it corrects its mistakes. But why? The time corrects mistakes when you buy right is because of what we live in monetary system. We don't have real money. We have floating currency system. It's all about credit and debt, and it's an accounting system. And because the last while, and especially this pandemic time, all the central banks are pumping money into the system like crazy. It's never happened before like this. It's when you actually look into it, it's staggering, and it's actually quite frightening. and it's washing away the purchasing power so fast. And this so-called stimulus money, it's not a stimulus money, it's a stay-home money. There's really no production that's happening. The production is plummeting. And as I mentioned, the long-term debt cycle is coming to an end as well. So when big changes like this happening, it's all about hard assets. Hard asset is what stores your wealth and purchasing power through difficult times. And it's a hedge against inflation and financial panic. So let's talk about impact of pandemic, COVID. CERB will come to an end. Rent is down, vacancy is up. You know, it's like the CERB will come to an end. The mortgage subsidy will come to an end. There's going to be rent default. There's going to be mortgage default, and there will be more businesses going out of business. And I really hope that I'm completely wrong on this. And I'll be very happy if I'm wrong. And I want to be right, but I'm preparing myself for it because it is likely. And I believe the only way to get prepared is really go down to the basics and follow what the old money have been done for over the centuries. I'm not talking about 10s and 20 years of old monies. I'm talking about a couple hundred years. So it has happened many times before. The old money, we are entering twilight zone right now. The wealth preservation, the way of old money. There are families in Europe that held on to their wealth over 300 years or longer. And that's beyond business cycles, war, invasions, collapse of empire, revolution, and natural disaster. And in order to survive that, it requires a longer view. And you gotta have sense of history and be prepared for the worst case scenario. So the rule they go by is the rule of third, a third, a third. Over the centuries, it is a hard asset, not the paper assets that retain value through a collapse and catastrophe. The old money knows this. They have seen it all before. So when they talk about third, 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 they're talking about land, gold, and fine art. And when they're talking about fine art, to me, it's collectibles, like vintage cars selling at, record price, wine collections, watch collections, anything that can hold value in certain collection of groups, right? But I don't have money for land. I don't collect fine art. I collect land. Value of land and gold and art is intrinsic. Yeah. There is no issuer who can suddenly make land disappear or turn gold into confetti. So why real estate? We talked about real estate in general way and real estate in JK way. So to me, it's all about hard asset first. It's all about land and the dirt first. So when I'm looking for properties, I'm looking for location. I'm looking for key location where it will hold its value over long term and where people will always want it, right? And the reason I like real estate is because it can be fine-tuned. Real estate, unlike gold or arts and whatnot, the price is set. Gold price is gold price. It's pretty much the same everywhere. However, real estate is extremely local. Different countries, provinces, cities, neighborhood, streets. Then there's a types of properties, and there's a quality of property, and there's an appeal of each property, each different types of properties, and tenant profiles and etc. By using all these knobs, you can really fine tune and increase your odds of success in real estate investing. And as I mentioned, real estate is an asset that you can force appreciation by renovating, changing use, rezoning, site plan approval, etc., etc. Now, what's most important to me in order to hold on to that asset, especially if we do go through that hard times. Like I've met some really wealthy people who's got portfolio of real estate, and they're worried. It's like, yeah, it's okay now, but what's going to happen when they can't pay the rent? When all these businesses go out of business, and when these tenants are not paying rent? That's a problem, right? So it's good to have asset, and it will, when you come out on the other end with asset, you'll be more than fine. But in between, you got to be able to hold on to that asset. And in order to hold on to that asset and preserve wealth, it's cash flow. You need cash flow to pay for it so that you can hold on to it. So why Toronto? Why now? So as Volition guys have wisely mentioned all this, it's a low supply, low interest rate, high affordability, and Toronto as Canada, as an international country, I think because of COVID, its status has even gone up more than before. It already was a country that everyone wanted to come, but now even more people want to come, and even more people with money and talents and brain power wants to come to Toronto or Canada. And Silicon Valley North is kind of nicknamed for Toronto. And this is a quotation, Toronto is the most cosmopolitan city in the world. It's like shining beacon of openness in relative terms. So there's about 300,000 new arrivals, educated with money. And in Ontario receives about 46.2% of these people. And then GTA receives about 77% of that. That means about 35% of all immigrants come to GTA. So that's why I'm a believer of downtown Toronto. And Toronto is at the very beginning of a massive transformation. And this pandemic presents even more opportunity because of that, while everyone's panicking and everyone doesn't know what to do and everyone's just micro adjusting. But when you pull back from all this noise, you will see that what really matters is the dirt. It's about asset grab. We need to grab that land right now and create a means to hold on to that asset by having cash flow that goes with it. The financial system right now is at a verge of a reset, and holding on to asset is even more important because of that. So, Jin Kim and Co, who we are and what we do. Let me close my door for a sec.
Yeah, I hear the vacuum.
I know.
I went to go mute someone, and then I realized the vacuum was coming from you, and I thought it wouldn't be a good idea to mute the speaker.
Is it better?
Yeah.
Okay. So JK and Co, who we are. So we are value chain creators. So number one, I'm an investor first and foremost. I'm a deal creator and I'm a property developer. And as we know, when we do real estate investing and when we are working with Volition Group, fine folks at Volition Group, we need to do construction and build. So, I used to employ other people to do the construction for me, but I came to a point that, I wanted to have that in-house so that I can control, like when you find, it's really difficult to find good people in construction. And when you find these good people, you want to hold on to them. And I came to a point that, I want to build a company with them so that I have good people to build things for me. And then I can help other people do the same. And then third tier is operation and property management. As I mentioned, my software. And the software is all about short-term rental and hoteling. So why three-legged approach? Development, and the management and construction. I can have control over hardware and I can have control over software. And when you put all these three parts together, you can customize it and amplify the return, right? And my long-term goal is this, it's like I want to build out an upscale short-term rental co-living brand. And the reason for that is the reason that I started to offer my service to other investors is that I saw that, just like Volition Group's doing, there's power and strength in numbers. I want to build out, I see a need for building out short-term rental portfolios that are geared towards co-living. And let's say 5 of us investors come together and we put up 2 properties each, all in downtown core location, and we turn them into co-living houses. Then we can have an umbrella brand that manages and cultivate the culture within their brand, right? And co-living on the surface is just about convenience and the cheaper rental, but there's more upside when you put them together. I believe when you look at the younger demographics, the millennials that we are all trying to retain as our clients, they come to us not because they want to own things, but because they value convenience and experience. The experience is something that they are all willing to pay extra money for. So let's say we have a portfolio of rental stocks, sprinkled around Dovercourt and Bloor, Dovercourt and College, in Roncesvalles, Queen West, all these different downtown pockets. Now you offer it as a collection of co-living properties. Now we can have database of all the clients, and we can create culture amongst them. I can say that, hey, John, hey, Bob, hey, Sue, did you know that you guys work in the same kind of field? You guys should meet. Oh, by the way, when you move in, you have a network of all these new people who are all up and comers and all professionals who are in law field, accounting field, and technical field. And now you have an instant network of brain power, and their network becomes your network. And if you provide an environment that fosters that relationship, you can build a business club out of it. And you can create a club that everyone wants to get in, and there will be lineup of it, right? Talking about creating raving clients, So that's my long-term goal. That's why I'm building it out the way that I'm building it out, so that I can get help from other investors and help the other investors as well. And as a collection, we can do better than what we can achieve as individuals. And we work with other investment partners, and we offer passive investing. And I hope that maybe once the Volition, once the Volition guys launch the fund, hopefully maybe we can get to work together one day. That'll be very nice thing to see. So we're an investing firm first, and we do property development, and we create opportunity, and we create opportunity according to our crystal clear insight and objectives, all according to that old school, old money objectives. Land first, create massive value, and put in the best type of clients and make them happy. That's the business model, right? So we find properties first, then we offer, we tie it up, we inspect, negotiate, close. And as an alternative investing, as Matt had mentioned, Toronto real estate is very expensive. And when we work as a collective and put concerted effort, we also, along with our knowledge and experience, that we can offer hands-off passive investing, and more opportunity for everyone. I work with equity partners and joint venture partners. So on construction side, construction is construction. You guys all know what construction is. We do anything from full gut, converting to multiplex, and we do various levels of rental, and we outfit properties for short-term rentals as well. And I forgot the pictures. I forgot to put the pictures in, so we'll have to skip that. So property management, this is a highlight of the topic today. So types of property management, there's short-term versus long-term, and furnished versus unfurnished. And I say renting versus hoteling. The reason that that we lean towards short-term and furnished, and hoteling is all about asset protection and controlling that asset. This COVID is an interesting trigger. It's on the surface, it's a health issue, but underneath of it, it's an economic issue. It's a financial issue. Because of that, it's becoming a social issue and psychological issue. And when it is becoming more of a social issue, I see that there's more of a friction between what appears to be haves and what appears to be have-nots. And that's the space I left in Hamilton and Chatham, and that's a space I do not want to go back to. And I want to have my clients as who are guests to my place, where they look for higher level accommodations, and they just want to be pampered, and they know that they're not going to be stay there for forever, right? So by doing so, I'm hoping to create more better cash flow and also solve the cash flow problem. But as I mentioned, we are going through some really interesting time, and I've seen the changes in short-term rental market from February to now, and I really don't know what's going to come. But one thing I know for sure is that I need to hold on to the asset. I need to create cash flow, and I don't want to be stuck with people who will not help me service that asset. So, short-term rental, control over asset to stay out of legal issues. And also because of COVID, more work from home, and we supply more of the desks, chairs. High-speed internet is becoming extremely important, and different neighborhood and pockets have different appeals and different types of properties. These are the things that Ed and Matt and Ming mentioned earlier. There's a big exodus from downtown core of tall buildings, and then moving out and dispersing to the neighborhoods, low rises. These younger people, they're not necessarily moving out of the city. They will never want to go back to their parents' basement. They still want to be in the city, but they want to be more in the neighborhood where there's more culture inside, where they can just walk out and get a tattoo whenever they want to get a tattoo, and grab that coffee, and oh yeah, don't forget the joint, right? So the neighborhood matters. And these times, as Ed mentioned, larger houses are attracting more people, and the cottages are doing doing well as well, right? So short-term markets during pandemic, how is it doing? At the beginning of this pandemic, I saw everyone leaving short-term rental market and flooding the market. And that's when I realized that, okay, if everyone's leaving short-term rental market, I got to look the other direction. There could be some potentials. And that's what it was, no matter what, people will always need short-term rentals. When people talk about short-term rentals, they only think about Airbnbs, but that's not the case. Short-term rental is, traveling, but it's about business and sometimes relocation. People go renovations, and people are sometimes in between houses. Like I had an Amazon manager, and he's going like, my office is closed until October, November, and I'm working from home. And when it comes to October, November, I still don't know if the office will be open for me to go back. So I can't buy a house. I can't get into long-term rental. I'm going to stay in these short-term rentals, right? Jobs and work from home. And as I mentioned, the trend of rental preference is changing as well. So short-term rental management. So when we do short-term rental, we first, like when I purchase it, I run the analysis first. Like, is it at a suitable location where people would want to come and stay for short-term rental basis? And when we get the property for ourselves or for our clients, we come up with, my team goes out and come up with an optimal unit configuration so that we can maximize the return. And we do property design, and we source the furnitures and arts and decoration, etc. And if the renovation is needed, we'll do renovation. And if we supply the full list of household items, everything from linens to forks and knives and oils to coffee makers and all that stuff. It's like a big, long spreadsheet. We try to make the whole process as simple as possible. So short-term rental management, we do, what it means is that we do channel management. We do photos, descriptions, we put them onto different channels, Airbnb, Booking, Home Away, and all that stuff. And there's also pricing strategy, and we take care of guest communications, and we do property upkeep and maintenance, property optimization, and we manage incidents, and we manage turnovers, and we provide reportings and communications. And also, we've been getting some inquiries about managing long-term rentals. And when it comes to long-term rental, is tenant communications, lease renewal terminations, tenant notification, rent collection, all that stuff that you already know, right? The property inspection, tenant and customer service resolution, property maintenance, improvements, etc., etc. So we work with other investors to provide strategic financial direction. We offer them passive investment, joint venture partnership, construction management, and property management. So here's some examples. Let's put all this together and show you some examples of the properties that we've done and up and coming properties. This was a first property that we converted to short-term rental. And ironically, we finished it around February, and I was like ready to make some good money, and the pandemic came, and then it was like, oh shit, what do I do now, right? Surprisingly, this property did quite well. We had consistent month-to-month bookings, all families, various reasons. Some people coming back from US or coming back from different provinces, some people between renovations. All great people, mostly families. Some of the example pictures. We try to make sure that we mix old and new. We don't want to be generic. When we outfit the properties, we think of boutique hotel. Although it's not pure hoteling service, but we try to be, kind of strive ourselves to be boutique hotel-like, so that we can provide an experience that people can remember. And, it's all about building the brand. So when you have database of these clients who's been happy, you can create a brand and you can market them in the future, and you can become platform independent. When, Airbnb goes, something goes, you still can have a brand that people can come back and contact and get your properties through. Some more examples. And this is the newest project that we are working with. We got that through Volition Group. Edward worked on it so hard with every single day for like good 3-4 months. And it was very appreciated that, Ed put up with me. I literally spoke to him every day from morning till night. And we finally found this property, and I jumped on it, and we're extremely happy with what we got. This is what it looks like. I should have added some before pictures. Once again, I forgot. So, there's a little nice mural outside. We did some painting outside to increase the curb appeal and to make the property stand out. And I'm turning it into 4 units. There's going to be 3 residential units, and I'll be converting the 2 garages into a on-demand office space. Because that's another interesting thing. We noticed that, like in these different neighborhoods, that, right now at a co-working space, but this is very nice, but it's not for everyone. There are more mature professionals who's in this downtown neighborhood. They want meeting space or office space once in a while. Your psychologist or psychiatrist or someone who's professional, but you just need some space once in a while, but they don't necessarily want to go into co-working space. And I think they would really appreciate well-furnished, upscale meeting office space in the neighborhood. So that's the market I'm going to try. I'm going to test out next while. So this is what it looks like now. We're just putting the polishing, the finishing touches on it. That wall was so much work. We found the brick wall behind the lath and plaster. We had to do something about it. So we took all the lath and plaster, and our people went and did tuck pointing on every single one of those. It took like literally weeks, and it's a really difficult and dirty job that you don't want to do, and you're really thankful that someone's doing that for you. This is a bedroom. So now the next project, I have an accepted offer on 2 properties at Dover Court and Bloor, and that is really exciting project because I really believe Bloor West. I'm letting you in my secret, but it's not really secret. People know, but I really feel like Bloor West is the golden stretch. Say starting from Bathurst all the way to Lansdowne. That stretch of Bloor will change so much next 5-10 years. Right now, there's a Marbish Village that's happening at Bathurst and Bloor. That's going to be a massive redevelopment. That's going to shape the whole neighborhood. And then, as you know, the reimagined Galleria at Dufferin and DuPont. The phase 1 sold out in 1 day. It's just insane. And then there's a redevelopment coming at Dufferin and Bloor. And there's another one coming at Dundas and Bloor West. And there will be another one at Lansdowne and Bloor as well. Like some people are calling it the new Young Street. When all these developments are done, like you wouldn't recognize that stretch. And one thing about Toronto is that it's very shameful as an international city that we have such an atrocious public transit. It's shameful. We have 2 subway lines, but hey, Bloor is one of them. And if you can be on it or near it, no one can take that away from you. So we have an offer on 2 properties side by side, 725 Dover Court and 723 Dover Court. The location is, this is Bloor, and this is Dover Court. And there's an approved condominium at the corner of Dover Court and Bloor West on the northwest corner, 12-story, 102 units. And the red box here is the 2 properties in question. So on this commercial zone right here, just right next to the property, it's a potential 12-story tower here. And right south of it, there's a 6-story existing condominium. And across the street, there's this monster apartment buildings. I don't even know how tall they are, probably like 20-something stories. So there's a massive opportunity in this pocket. It's like 4-minute walk from the Ossington station, 450 meters as well. So once I get through this, you can see this. If I can see if I can zoom it. It doesn't let me zoom in. Oh well. So between 2 buildings, I'm going to keep the commercial unit that's there, but just for the simplicity of the model. Let's say if I put conventional 3 units on the bigger building, which is this one, unit 1, 2, 3, and then 2 units on the next building, spread across the basement and the main floor, and the 2nd floor and 3rd floor, I get 5 units out of it. And on top of it, I can build 2 laneway houses at the back. Now the next, this is exciting. I'm not sure if you can see it, but because of the unique location, it looks like it's very, very, very achievable to attain almost 1.4 density. So what that means is that, like, by the way, I'm planning to dig out basement in the laneway house as well, because as everyone mentioned, you can't, they're not making more land, and the land is becoming more and more valuable. And I believe in some years down the road, those people who built laneway houses without basement will look back and regret that they didn't do it. So unit A, the unit that was between the main and the basement unit, the main and the basement, the unit size is 1,800 square foot. The other one's 1,700 square foot. And another one is 1,100 square foot. And another unit, another 1,100 square foot. And another unit of 2,000 square foot. And another unit, 1,200 square foot. And the laneway house at the back, 976 square foot. So there's 7 units. And let's say I turn them into co-living houses with 3 units each. And that's 21 rooms that you can rent out. And those rooms will be exceptionally well appointed, and they will all come with its own bathroom. And I want to appoint them with transformable furnitures. So even when you're in your room and when you don't need your bed, it lifts up and it disappears. And you can have closets that moves out of the wall and moves back in. So imagine you live at the corner of Dovercourt and Bloor, and this whole complex is geared to professionals. And you come in and you're gonna meet who's who of up and coming people, and there's gonna be, you know, there's a culture to foster the networking and you know, interaction between people. Yet at the same time, when you go back to your room, you have your own bathroom, and you have furniture that transforms, and you can have your own living room and sofa, and the bed comes down when you need it, right? So I think that's where the future is. Like I'm completely sold on shared economy, and as you can tell, like I'm at a co-working space, and downtown Toronto, as Matt mentioned, you know, initially it was 1 unit, then it's 2 units, then it's 3 units. Now we're looking at 4 units. Now we're going to be looking at rooms. Now we're looking at offices that are shared between people. It's all about shared economy. And I think that's where the future lies. And that's where we can find that protection for our asset. Land first, buy the land, improve the value, and give people what people need. Look at the trend, right? They want to be in downtown area where culture is, where other people are. Like this pandemic will be over next 5, 10, whatever. We are social creatures. We cannot survive without other people. So we're gonna adapt in one shape or form, but we're still gonna need each other, and we're still gonna want it. So that's my thesis, and that's why I do what I do. I hope it makes sense to you, and I'll open up the. Oh, that's my pro forma. If someone's interested, they can take a look at it sometime. And this is all about, you know, the real estate investing is all about personal economic freedom. You know, is like as I mentioned earlier, I'm nowhere close to be where I want to be, but I've been to some far out places and some deep ends, and I'm still in the process of coming back. But you know, I have a lot to share, and we can all work together and make our journey more fun and enjoyable, and avoid more pitfalls, right? So here's my contact information. Thank you very much for listening to me. And if you have any questions, I'm here.
Awesome. Thanks, Jin. I mean, I'm a believer in what Jin's doing. So just so you know, I've hopped aboard. I think, you know, myself and I think Ming have made ourselves scapegoats for this meetup, for all the investors and for all of our Volition clients in testing out Jin's business model and sort of that software approach that he's been talking about. More specifically, so I'm just gonna end your screen share if that's okay, Jin.
Yep.
Or maybe, I don't know how, maybe you can.
I was also going to say, managing is that, as we see prices and rents go up year after year, this idea of co-living and living with professionals is going to become more and more common. I think we see this quite a lot already, especially everyone, especially in big cities where everyone wants to do their own ventures or startups. People want to live with people with like-minded, share ideas. We see hacking houses a lot in San Fran and LA, especially where rents are just ridiculously overpriced. And people say Toronto's expensive, but we are a big city in North America, and we will eventually get to prices where you're either a renter or an owner. And you're either an owner now or you're going to be a renter in the future, right? And once prices go up, rents usually follow suit, especially when the city does become more desirable. And if you're able to hack a house like Jin envisioning, providing them with luxury or very accommodating units, and be able to cash flow tremendously on the small pieces of land that you're able to afford in Toronto, that's probably the way to do it. That's how you maximize the pieces of property that you do have currently, right? So, I think the reason why we asked Jin to talk is because his vision is going to be a reality soon enough.
Yeah, I think just wanted to add a little bit more. Sorry to jump in. It's about, I think, there's if you follow this whole co-living trend, it's not a new thing. There's been, we've been doing roomings and roommates and all that stuff for years and years and years. And also co-living as a new thing have been happening for a long time in the big cities all across Europe and US. Now, and there are big companies in Toronto, and like Mervis Village is exploring. And I know some development companies that are building 180 unit co-living buildings, and you're gonna see a lot more of it. But I feel like the real niche is creating that unique experience, more of a hoteling experience, like pamper them so that people would like to pay more. But on top of it, let's say as a collection of investors, we create the culture together and have a brand. Like that's where you can really add extra value. Hey, there's an event for the Hive or commune co-living properties for all the professionals to come and mingle and we're gonna have database of all these people, and we're gonna do everything we can do to facilitate to hang out together and get more value out of it. It's like, why do people sign up for yacht clubs or the spoke clubs? It's for opportunities to meet other people. Now, if you provide properties that you only cater to these knowledge workers and high-end workers, and you provide them with a culture to mix with each other, they're gonna line up.
Yeah.
Why would they go anywhere else?
And I think one more thing is that I'm not sure if there's any commercial investors here in Toronto, but when you're buying a commercial property in downtown core, you're looking at cap rates of like 3 to 3.5%. If you're able to create a co-living space or even a rental property that's bringing you like a 6% or 5% cap rate, you sell it to any investor, they'll snatch it up in a heartbeat. Obviously, the execution of the property is a big factor, and that's why finding someone who can actually execute and bring in and manage these type of rental properties is key to get those high cap rates. But if you're able to, I mean, like that's actually quite insane as an investment property in Toronto.
Yeah.
Go ahead, Matt.
Well, I just wanted to say, like, basically, yeah. So I mean, Jin approached us with this, and as you know, we don't endorse anything unless we truly believe in it ourselves, and we don't until we've actually done it ourselves. So I know myself and I think Ming, I think the two of us have actually we are guinea pigs for all of our investors and all of our clients, and for, again, this meetup. We took a portion of our portfolio, a couple of units of our properties, and actually started converting them. Handed it over to Jin because I wanted to test this out. I wanted to see this thing in action. I wanted to see how well his software ran on my hardware, right? I wanted to see if it was going to be the seamless integrated experience that he was pitching to me, right? Trying to build. So, we wanted to test it out. And my caveat is that we started this at the beginning of COVID, right? So, it wasn't the greatest time. We had vacancies for the first time ever. I've done this for well over a decade now. And this was the first time I ever had a freaking vacancy. I have a fourplex in the annex. Like if I put up a listing, I usually have 3 people knocking on my door within 5 minutes. Like literally, I put up a listing and had it filled, and person moved in by the next day. That's just the type of demand that I'm used to. So when COVID hit, and I was like, oh my God, I have to work hard to get my units filled. I was like, what the hell's going on? So I thought, okay, you know what? Let me take a step back. Let me actually explore this thing with Jin a little bit, right? It was Jin and I hadn't connected in a while. We sat down, had coffee, and I said, tell me about what you're doing, and let me explore it, and let's try it out. Because it sounded really, really great in theory. I wanted to see it in practice. So my caveat is that, a couple of things happened during in the beginning of COVID. I did not convert it to co-living quite yet. That might be in the future. Right now it's being managed through short-term rental. I saw a couple of messages previously. People had some questions about short-term rentals. Today, I think Florence sent out this update from the city of Toronto that STRs had to be registered. So I'm sure there's a dozen burning questions for Jin, but I just want to talk about my experience really quickly. So to baseline everything. So Jin had promised me that, what he was pitching me was, hey, I will take care of everything for you. I will, is it okay if I speak on your behalf, Jin, about what you're doing?
Oh, absolutely. Go ahead. I love it when you talk.
Well, I like when I talk too. There's no one else likes to listen. But I was looking. I wanted to see if Jin could execute on what he said he was going to do. So I was looking for I wanted analytics. So he's like, oh, I think what's your current rent? Okay, well, current rent under normal circumstances. What's your current rent now in COVID? Right? What are you trying to rent it for? Using some of the analytics and some of the back end infrastructure that Jin has with his partners. He can actually find out, based on your location, the type of unit you have, how big, how many bedrooms, etc. He can predict the amount of rent you can get and
past data.
Based on past data. And so using that data scraping and using those analytics, he could come up with a prediction, inclusive of management fees and everything else, to see where you net out. And then we can see, okay, well, let's see if this works out. And then we weighed the pros, the cons. One of the things I'm not sure that you talked about, Jin, was one of the benefits of going with the short-term rental being you don't have long-term lifers.
That's right. That's number one. That's number one key right now. Sorry to jump in, but it's not even about making a lot of money at this point. It's about asset protection. And I want to have people in there who's going to pay consistent money and they're going to keep on moving out. I don't want the lifers now. Yeah. It's about, once bad tenant gets into our properties, we lose control. Yeah. That's the last thing I want. Right now, it's about the control and asset protection.
Yeah. So, I liked what Jin had to say. So I said, okay, do it. So Jin went in, he went in, him, designer, maintenance, like repair contractor, went in, fixed it all up. Designer came in, said, okay, you need this. And then put it together in a list. I said, okay, go buy it. They went up, they sourced everything, they bought it, they outfitted the entire place, and then they went online with the unit. Photos, listing, so all the advertisements, and everything that they needed, and then it was completely hands off. So actually, it was what I would consider to be a pretty fantastic experience. And the benefit that I'm having now is, I have to go back and see, I have to go analyze my sort of dashboard to understand how it's been renting over time. I haven't been tracking it, truth be told. But I'd like to see if it came out anywhere near what I would have been getting anyways, but now it's fully managed. So Jin actually has an entire team, in part of his backend infrastructure, to field that first call. So even if I didn't make an additional $1, that's a tremendous value to me, because I'm a busy guy. I don't want to be answering phone calls. I hate tenants, right? I mean, you guys know me by now. But that's tremendous value, even if I'm not making necessarily any additional money. I could be, but the fact that headache is now taken away from me. So again, a couple more caveats. There was an investment. I had to spend money to outfit the place as per the designer. And one of the things I'm challenging Jin on is to get sort of like a standard. I know he doesn't like standard, but because he likes to personalize every property, but a standard palette of stuff that can go into the units so that a client, Volition client, whatever, knows what to expect. 2-bedroom, 1 bath, typically will fall in this range because we're looking for these things, right? Yeah, so it's been a fully managed experience, and he gives me continual updates. Sends me photos. Repair guy went in and fixed stuff that's been needing to be repaired for a long time. I'm like, hey, this is great. Like I haven't been to my property. I haven't thought about my property in months now, right? And it
looks so good. You want to go back to it.
Yeah, I know. It looked so good. I wanted to move back after I moved. It was where I used to live, and then I moved out. But yeah, so Jin has been able to fully manage that entire process for me. So that's been my experience, and I wanted to baseline it by saying I am a guinea pig of Jin's process, and it's been pretty remarkable thus far.
Thank you.
There's one thing that you touched on, Jin, which I wanted to just highlight for folks on the line, because I think when I first thought about your short-term rentals, I was also in this space of like Airbnb vacation. And that's not at all what this is. We use the term short-term rental, but it's not, they're not the same product at all. It's like short-term is like months, actually. Like everybody's staying for month-long terms. Right. So it's shorter term rental, but it's not short-term rental that most people are kind of perhaps familiar with. And it's also not vacation. And to be quite frank, I didn't have any exposure to these kind of renters before. So Jin's been managing one of my units, and I've had 3 types of tenants come through so far. First one actually came through because they were temp workers to help with COVID testing. So the pandemic, which was causing me to have vacancy, was now actually turned around and helping me fill vacancy. The second people that came through were those that were leaving kind of a politically unstable country to come to Canada, where it's quite good. And they'd always planned to do it. It's just it happened in the middle of COVID. So there is always a percentage of population which are moving around, which need this kind of short, but not like vacation length, exactly, like length of rental. So I just wanted to highlight that for people, because I think that we talked very quickly about that, but it's actually not like, 3 or 4 days stay here and then you got to turn the whole place around. We're talking about like months at a time.
Yeah, I really actually like that a lot better in some ways, because when I have people go through who comes in and out within a couple of days, it's a lot of turnover. Expense is actually higher, and they tend to be a little bit more rowdier. So I really like longer term. Like I like the term hoteling, because it's not really, as you mentioned, short term, but it's more of they're looking for temporary, transitionary kind of accommodation, but nice. Right?
And you know, to talk a bit about numbers, when first came through, so typically this unit would get about 2,400 on the standard long-term rental market. I hit vacancy right in March, right when COVID was starting. We managed to get it filled at 2,300, which is less, right? But we always knew, as Jin said, it's not about, you know, when you're in a crisis, it's those that separate sophistication from just plain old luck is how you manage the bad shit, right? Like, how do you get through times when you have pandemics, times that you have economic problems? So it's about asset protection, just like Jin said. So we got it filled 2,300. Now my losses are only $100 a month, right? Instead of, you know, 2,000 something. So it's much better. That person only stayed for, I think, a month, maybe two. We turned it over again. Then the next person paid 26. And now we're turning it over again in September, and that person's paying 3,000. So I'm doing way better now, actually, financially wise, and it's fully managed. So I've been very happy personally with the way things have gone. You know, with this particular unit that Jin's been taking over. And I think it is, you know, I will eventually go back to long-term rental because there's some good stability around long-term rental. It helps with my mortgage qualification. There's a bunch of good things around that. But during this time of crisis, when I'm trying to protect my asset and not lose my shirt as we go through tough times, this is a good, you know, very good solution.
John
Yeah,
Borello just,
sorry.
oh, sorry, I was just say John Borello is trying to coin a new term, midterm rental.
No, actually, we call it MTM, month to month. But like Ming's property was an actually big surprise for me. And like when Ming first approached me about, you know, managing his property, and we ran the analysis, I'm like, dude, you're
not good.
Not good.
So full disclosure, that place was never meant to be a rental property. It was my own personal residence. We moved out of there because we have a young baby, and that is not a great place for a young kid. So anyway, that's why I turned it over, just started renting it out. Jin came to help.
Yeah, it was a surprise because like the whole intention was just to help Ming out during the difficult time so that he doesn't end up putting someone in for like substantially lower rent and stuck with a long-term tenant, possibly not paying the rent. So it was just meant to as a temporary solution. But as I mentioned, as a pandemic kind of opened up this whole new opportunity. So I'm seeing new trend. And the reason that like I am opening up this management company is because of this pandemic, because I see there's a need for it. And there's a gap that we can fill in and we can actually build on it. And as a collective of investors, imagine we have like, you know, Volition / JK, you know, co-living properties or short-term rentals. We can have a website and, you know, we can have branding and, hey, you can choose from this location or that location. And I think there's a lot of value in there. And one more thing, when we start moving to co-living is technically long-term rental. There's a full lease in place. So you should be able to qualify for mortgages. And in fact, co-living might be a lot more exciting than shorter term rentals because now you have tenants who are staying there for 3 months to a year and maybe 2 years. So a lot less turnover, a lot less management. So I'm looking forward to getting into that space.
Yeah. I'm going to open it up. You guys probably have a bunch of questions. Why don't you, well, first come, first serve. Write it in the chat or unmute yourself and you can ask it.
I had a quick question here, or a few questions, but yeah.
Okay.
My first question is for...
Who am I looking at?
It's Will. It's Will.
Will, yeah.
How do I see Will? Where are you?
Will's not sharing his screen.
Let me share my screen.
Sharing his video.
Yeah.
Hey,
okay,
Will.
I'm in the kitchen, that's why.
All right, okay.
Yeah, I'm multitasking. I'm cooking dinner. So, Jin, yeah, thanks for, you know, letting us into your 365 Gladstone. So that was very helpful.
No problem.
Yeah.
Oh yeah, Jin actually hosted a tour through one of his properties like a week and a half ago.
Yeah. So my question to Jin is, like this short term or midterm, like, you know, positioning.
Yeah.
like in the big picture of your portfolio, like what kind of function does it have? Like, you know, like for example, you know, do you do like 50-80% of your portfolio in long term, and this is kind of like a hedge, you know, during the pandemic, or like what is its role in the bigger portfolio of things? I'm just curious.
For myself personally,
Yeah.
100%, 100%. I don't
Oh, I
want to
see.
be. I don't want to be in tenant business. I want to be in guest service business, and that's including co-living. So that's kind of hybrid between guest and tenant, but
Yeah.
that falls into temporary housing, pampered category for me, right?
Oh, I
So
see.
like I'm like
Yeah.
it's 100% for me is 100% hoteling service, temporary
Oh, I
service.
see. Okay, cool. And then if you don't mind, Jin, I have a related question. You mentioned that your background, you have like 10 years experience in real estate investing and things like that.
Right.
Like, so in the 10 years, what is your like tip for like scaling so quickly? You know, because roughly I have the same sort of time frame as you, but you know, it seems like the first 5 years, you know, you just buy one or two.
Actually, you guys
and
have more
then,
in
you know,
common than you think. You're both water engineers too.
yeah, that's true. Yeah.
uh, okay, sure. I'll be very frank with you. I feel like I'm at level 0 now. I'm literally thinking that I'm starting from ground up, because
Oh,
the
wow.
first phase, that was like I learned a ton, but it's a completely wipeout. Like some of the properties I sold like 7 years after, I sold them less than what I paid for. And during the whole time, I wasn't making money. I was actually paying to hold on to them. So on surface, it sounded really good. I had 49 rental units, but they were like, I was bleeding. I was like, you know, working as an IT manager, and I was paying for the damn thing, and I was too proud to sell them, right? But I eventually did. So that's gone. And the second phase was the infill development, buying and selling. It's like all gone, right? Now I finally see that, okay, I see the light. I'm like, I'm super focused, like land first, and it's all about the client. And like
Right.
nothing but it's fundamentals. It's a fundamental time. It always have worked, and it'll always work through difficult times. And I'm sticking to it. Sometimes people call me and say, "Hey, Jen, this awesome property in North York." I'm like, "Sorry, I'm not looking at it. Downtown only," right? So
Got it.
yes, so yeah, I may have scaled fast, but I dropped. I went up, got back, and now I really am starting from scratch. But I
Right.
know what I'm doing now.
Yeah. Thanks for that, Jin. You're very modest, but you know, yeah. If you're level 0, I don't know. Maybe I'm negative, whatever.
No, I'm level 0.
Jin's pretty modest there. Like, you know,
Yeah.
well, a year ago he came in to talk about his townhouse developments and work that he was doing, some massive scale stuff. So, um, uh, we appreciate your modesty, Jin, but we know your real story already. So,
But it's the truth. I'm starting from the basic. I think that's where we can all benefit from. Like just work on fundamentals. That's what the Volition guys always been, and like I can't agree more than what they've been preaching. So thank you.
Yeah. Thanks a lot, Jin.
Yeah.
any other questions? I think we got one here.
Ben Hui.
Sorry?
Ben Hui.
Oh, are you able to elaborate on your idea of asset protection / control?
Yeah, asset protection means that it's about moving away from tenant space, right? Because as I mentioned, once you put tenants in, you kind of lose control, and especially when you have bad tenants, it's an extremely difficult process to kind of regain that back. So that's what I mean by asset protection.
Yeah, and you know, we talk about a very similar concept here at Volition all the time. You know, we call it a risk mitigation strategy, and that's about finding the right properties to make sure you're getting the right tenants in there. If you've been a landlord for, you know, any period of time, you've likely had a bad tenant, and there's nothing more soul sucking and damaging to your business than having bad tenants, especially because the way that the laws are written here in Ontario, it's very tenant friendly. And your only opportunity is to get it right up front, which is buying a property that actually supports having the right tenants in there, right? Doing the renovations to attract the right kind of tenant profile. Because you can't do it the other way around. You can't buy in the wrong areas and do a wrong renovation, then expect to get great tenants. That's just not how it works. So,
Yeah, client first.
yeah.
Cool. The next question was by VG. It's often brought up about the disparity between income and cost of living. What are your thoughts on this, and how big of an impact will this have in the real estate rental industry?
That's a loaded question. I think when I was, Ed can tell you, but like when I was looking for properties with Ed, and I've seen some properties with some really questionable rental accommodations, and I told Ed, it's like, look, I can't buy this. If I buy this, I got to kick these people out. And I know they can't find another place with a similar money. They're fucked. I don't want to touch it. And I feel like the income disparity and the wealth gap has been getting bigger and bigger. It's a system issue. It's the monetary system that we are in. It encourages it. And a lot of people make money out of no actual production. And in some ways, I think it's good that it's coming to an end, and there's going to be some sort of a readjustment and resetting. And I hope that this pandemic will help us kind of see that. Look, it's like we need more equality. But I'm not talking about it's got to be merit based. There isn't more equality in opportunity. That's lacking right now. But you can't have equality in outcome. Like the people who put in the work and who wants to learn should excel. But at the same time, everyone should be given a same opportunity or opportunity to learn how the game's played. Right now, the problem is that we as a group, at Volition Group, we know how the game's played. So we're taking advantage of it. But general public don't know it, and they don't know where to go to learn about it. And also when you teach them, they deny it because that's not how they brought up, right? We've been told that you got to work hard and go get a job and put in the hard work, and that's the real way to succeed. But we all know that that's not how it works. That is a nice thing to be, to aspire to, but the system is not set for that. So, yeah, I went deep end again. Sorry, but yeah, I think it's going to continue. But we just gotta, I'm not here to fix the problem. I just know what the rules are, and I'm gonna try to cater to the people that needs kind of accommodation that I'm trying to provide. So just trying to match it. You can't fix the world, but you can work with the people that jives with you.
Yeah. I completely agree. Like the question has such a strong socioeconomic implication to it. At the end of the day, when I started Volition years ago, I tried to tell everyone about the transformative power of real estate, and how it would, because I spent, it took me years to fully understand it, but now that I fully understood it, I understood the mechanisms through which you can build wealth through real estate. I was trying to preach it. I was trying to convert everyone, and I had very, very, very limited success in doing so. People just thought I was, well, whatever. They thought whatever they thought. And, it made me realize I can't help everyone. I can't solve everyone's problems. I can only help the people who I can help. I can only help the people who believe what I believe. And so, what it is that we have here, what this meetup is, what Volition is all about, is about trying to elevate those around you who believe what you believe and want to be a part of what you're a part of. So this disparity between income and, the income gap and everything, it's going, unfortunately, Jin put it best, it's going to continue. It's going to get worse. I can't solve that. all I'm trying to do is understand, or now that we understand how the system works, how the game is to be played, we operate within those parameters, right?
It's it is not a popular opinion, right? What I'll probably get into a little bit here. We have contradictory values as a collective bunch of Canadians, right? In general, we're a country of immigration. We created on immigration. We thrive through immigration. And I'm an immigrant. My family is an immigrant family. A lot of people on the call today also come through immigration to this country. But that drives population. And at the end of the day, if you are having hundreds and thousands of people coming in every year, they've got to live somewhere. And the same very Canadian breath, we say that we want our green belt. We care about the environment. We don't like massive developments, and we don't like densification. Like, this is all the same platform. But at the end of the day, having those contradictory values, or at least values that come as a head to each other, results in pricing increases. We can't have, unfortunately, both lots of people coming into the country and expect prices to stay static.
And restrictive zoning.
Yeah, and it's we either have to make it easier for development, so there's places for people to work, or we close our doors. And unfortunately, we can't have it both ways. And when we try to, the net result is what we're seeing, where we see kind of stagnant wages because people are coming in and they're willing to work for that price, and at the same time, way ton of increased demand. So I think it's a very tough thing, but unfortunately, that's the result of having these kind of contradictory values.
Yeah.
And also, go on, Matt.
Yeah. The last part of the question was, how is this gonna impact the real estate rental industry? Rents, I wouldn't be worried about the rental industry. For all those things that we just talked about, immigration, population growth, and everything, like there's people coming in, rents are strong, they will continue to be strong. I don't think that you should bank on double-digit rents growth like we've been seeing. I don't think anyone should ever bank on that. I think that we should see steady growth, which is fine. It's, I think rents are going to continue to grow. I think the rental industry the rental market's going to be strong and strong enough for us in our business model.
What are we using right now in our modeling, Matt? 4%, 3%?
3. I almost never model more than 3% growth, and 2% is inflation, just for reference sake, right? Like I never, because it happens, but I don't bank on it, right? But yeah, so this is not to say this is the same in the 905s, 519s, 613s. For those of you who don't get that joke, I made this joke on our Volition Mastermind chat, and only 5 people got it. Like, you guys live in more of a bubble than I thought.
That's what happens. The dad jokes come out between me and Matt.
Dad jokes. No, but I was born in the 613, so that's maybe that's why I know other area codes. Okay, Jin, you had one last thing before?
Yeah, sure.
The next question.
Yeah, I think as you mentioned about the rent wise, it's like one of the benefit of staying in to me, the short-term rental, the asset protection, is that even if you're making about the same amount of money or a little bit less, you're going to be always be at market rent, because people are going to be constantly, turning over. So you're not going to have tenant who's staying at your property for 12 years and you're $1,000 shorter, right? That's never going to happen. And on top of it, your properties will always stay at a tip-top condition. There's never going to be deferred maintenance, because in order to attract constantly the top quality people, your place needs to stay at a tip-top condition.
Cool. Last
Yeah.
question from Gary. How do you screen these midterm tenants, especially if they're just moving to the country, which we can't check their credit scores?
Very good question. Yeah, you can't really. No, you can't. Not the way that we're doing it right now. Currently,
Gary's another
we're
engineer. That's why. Another Waterloo engineer. why there's so many? Why are so many of us on this call? Anyway, go ahead.
Those guys from Waterloo are the worst.
I know. Pain in the ass. Okay, go. What'd you say?
No. Currently, we don't have a really good method of doing it. But it's kind of it has a lot to do with like. This is also not an engineering term. The term that the engineers don't like. More about like intuition. You can kind of smell it, just the way they ask questions. The things they demand, or just the tone of the things. Or you can just look up their previous, the ratings and whatnot. But no, there's no really good way until we build our own platform and people come through our platform directly. And when we are going through channels like Airbnb, there's no really good way of screening it. There's no such thing. But I mean, you can only look at their ratings and their comments and such.
Yeah, I mean, it's not perfect. I think Jin was dealing with the noise complaint from one of my units or something like that, right? It's not perfect. We're still, yeah. Well, I mean, I think it's tough to do that. But I think Jin was looking at other reviews and going through profiles. A lot of the similar stuff that we do when we screen regular tenants. We can look at LinkedIn profiles. We look at Facebook profiles, those types of things. But these are not kind of hard analytics. These are probably on the softer side. And then you get a better sense of who the person is and whether they'll be a good fit.
Yeah. And just a follow up, right? Like these midterm rental, right? Like there's no lease, right? So that means that if something doesn't go well, or that's not true. Just about, yeah.
Good question. Are you an engineer?
Yes. Yeah.
We all are.
Okay. All right. Okay. So yeah, short-term rental, there's no lease, which is 28 days or shorter. But as soon as they go over 28 days, they get all the same rights as a long-term tenants, whether they have lease or not, right? So, but it's just like the tenant selection, just the same thing. You just, because you're going through a different platform and you're offering something different, you already are dealing with different profile of clients, right? So it's like the best way, everyone knows this joke, right? What's the best way of dealing with bad tenants? Don't let them in, right? So that's why, the property selection and type of things that you offer, you attract different people. You have hamburger shop, you're gonna bring burger eaters. You have a meat shop, you're gonna have a meat eaters. You're gonna have if you have a vegetarian shop, and you're gonna have a different clients, right? So it's just, you got to know what you want as a client, and you try to build something that'll attract them.
Yeah, you're going for the high end like a market. Yeah, so usually they're better. Yeah. Thanks, Jin. Really insightful.
Oh yeah, just one more thing. It's like almost like on every single one of our properties, like we make sure to put cribs in it. Not too many people are going to use it, but when they see the photos, they go, "Oh shit, this is a family place." The party people will be a little bit turned off by it, right?
Actually, we're trying to wrap up here, but I do want to make another point. What Jin just talked about reminded me that one aspect of what was really important to him when working on my place was to outfit these with a lot of personal touches. So yes, there's going to be the furniture and the furnishings, but he had architectural magazines, City Toronto magazines, crossword puzzles, like the things that would make the person feel comfortable being there, living there. And in his words, I believe he said, like, those personal touches make all the difference.
Yeah, it's like more like home-like place, right? I think, let's say you got, some tech workers coming, they're going to be working so many hours per day already. They want to come back to a place where they can be, It's nice, but no, not so sterile, like not out of a magazine, but something that's comfortable and familiar. It's like nice couch, but it's still a little worn. Like most of our like furnishings is like we have an amazing designer. We source almost more than half, if not 70–80% furnitures, all from secondhand markets. But these are all curated high-end furnitures that people are familiar with, but they're not afraid of using it because, hey, it's like, it feels like home. You walk in and it's like, hey, it's like, you don't think twice about sitting on it or, you know, having some food on it, thinking that you're going to ruin it because it looks like you just walked into someone's house and it's comfortable.
Cool. So last question we're going to take right now. JF is asking, does your hoteling model work in the core downtown condo, or is it more for multiplexes?
I'm gearing it towards multiplexes, but you know, we do offer like the management team that I'm building and that I'm working with. They started out with the whole condo management. So that yes, like in terms of just Airbnb, yeah, we do condos for sure.
Cool. Cool. I think we're gonna, if it's okay with you, Jin, if you guys have any other questions, you have Jin's contact, you can reach out to him directly. And or, what were we gonna say, Ming? You took over and.
Yep.
Yeah. So,
I just wanted to thank everybody for coming tonight. You know, as I mentioned at the beginning of the call, if you're interested in coming up with a customized plan for your investment journey, please reach out to us. You can send us an email at info@volitionprop.com. We'll sit down with you, spend a good hour, go through kind of where you are, where you want to get to in your investment journey, and we'll talk about, you know, how we can make that a reality. Next month, we're talking about life insurance. Now, everybody's like, oh man, life insurance is boring, but it's actually very key. You know, when we talk about risk mitigation strategies, life insurance and estate planning is part of that. It's part of that package. And it's unfortunately one of these things that keeps getting pushed lower and lower and lower in priority. So we're having Mary Sun come in to speak about not just like the basics of life insurance, like basically just getting a policy, but how does it apply to us as real estate investors? You know, maybe it's corporations, maybe there's inheritance tax, maybe we've got family trust that we're dealing with, and how does life insurance fit as kind of a key player into all of this? And she talks about some of the more advanced things too, like how do we use a life insurance policy that we can actually use as a guarantee on a loan to borrow from. There's some very interesting things that we can do with life insurance. It's a very interesting topic in terms of mitigating our risk as investors. So that's next month on the 16th. And yeah, who can do it? You guys can do it. Thank you so much, everybody, for joining tonight.
Oh, one more thing. Sorry to jump in. Yeah, just 725 Dover Court, the project that I mentioned. Like, I'm really excited about it, and I am looking for investors to work with. And I think it's going to be a truly like remarkable product if we can pull it off. And I would love to work with other investors. So please do reach out to me, and we can I can give you all the details and talk about the numbers and all that fun stuff. Thank you.
Yeah, and if anybody missed Jin's contact information, reach out to any of us. We all have Jin's information. We can get you guys in touch.
Yeah. So just a last thing, if you email info@volitionprop.com, you can say hi to Shelby. Shelby's going to be the one who's going to be kind of managing that. So if you have any questions, or if you need any contact information for anyone, just let us know. Okay, cool.
Thank you, everybody. Have a good evening.